Tax season in Canada. For most new permanent residents, this is the moment that feels the most overwhelming. You've heard horror stories. You don't know what forms you need, what income to report, or what you're leaving on the table. Here's the truth: filing your first Canadian tax return is one of the most important financial moves you will make, because it is the single action that unlocks thousands of dollars in benefits and credits that you are already entitled to. In the next 8 minutes, I'm going to walk you through the whole process step by step. Let's go. Let's start with why this matters so much. Filing your first Canadian tax return is not optional, it is a legal requirement for every new resident, including permanent residents. And it's the key that unlocks everything else. If you arrived in Canada in 2025, your first tax return deadline is April 30, 2026. Miss it, and you stop receiving the GST, HST credit, that's up to $592 per year in quarterly payments. You delay your Canada Child Benefit if you have kids, up to $6,765 per child under 6. And you lose the ability to build RRSP contribution room for the following year. Here is the part most new PRs don't know: even if you had zero income in Canada during the year, you still need to file. Filing with zero income is how the CRA confirms your eligibility for benefit payments. It takes 20 minutes and costs nothing. Before you open any software or touch any form, gather these documents. Your SIN, your 9-digit social insurance number, is required on every tax return. Your T4 slip from your employer, which shows all income earned and deductions taken at source. If you have any bank accounts, your T5 slip shows interest and investment income. Crucially, you need your exact date of arrival in Canada, because your first return is a partial year filing and that date determines which credits you can claim for the full year versus just the part you were here. You must also report any income earned outside Canada during the portion of the year you were already a Canadian tax resident. And keep all receipts, moving expenses, medical costs, childcare, donations, these are all deductible. Set all of this up before you start, and filing becomes a straight 30-minute task. Here's a rule that confuses almost every new PR and gets misreported on online forums. The CRA's 90% rule. In your immigration year, your eligibility for full non-refundable tax credits, like the basic personal amount, depends on whether at least 90% of your worldwide income was earned from Canadian sources during the year. If it wasn't, because you had income from abroad before you arrived, some credits get prorated and you only get a fraction. But here is the most important update: if you had zero income before landing in Canada, which is the case for most new permanent residents, you automatically qualify for 100% of your credits. The CRA clarified this in 2024. Many old Reddit threads and forum posts are wrong about this. If you arrived with no prior income that year, you get everything. This is the rule that catches new PRs off guard the most. Canada taxes you on your world income from the moment you become a tax resident. That means if you were still earning income from a job, rental property, or investments in your home country after your arrival date, you must declare that income on your Canadian tax return. Now, Canada has tax treaties with most countries, which means you generally will not be double taxed. The foreign tax you already paid gets credited. But you must declare it. Additionally, if you own foreign property, bank accounts, real estate, investments, worth more than $100,000 Canadian at any point during the year, you are required to file Form T1135, the Foreign Income Verification Statement. Not filing it is a serious penalty. This is not optional. Here is what actually happens when you file your first return. The CRA automatically assesses you for several benefit and credit payments. The Groceries and Essentials Benefit, formerly the GST, HST credit, pays up to $592 per year in quarterly installments for single adults. If you have children under 18, the Canada Child Benefit pays up to $6,765 per year per child under age 6, and up to $5,708 per year for children aged 6 to 17. These are tax-free monthly payments. Then there is the basic personal amount, $16,129 in 2026, which is a non-refundable tax credit that reduces the income on which you pay federal tax. Add provincial credits, and a new PR with a family can receive $15,000 or more in annual credits and benefit payments just by filing. And here is the critical timing tip. You can apply for the GST/HST credit using Form RC-151 the moment you land, even before you file your first tax return. Here is exactly how to file. Step 1. Create a CRA account at canada.ca. This is your personal portal to all tax information, benefit status, and RRSP room. You'll need it forever. Step 2. Collect all your tax slips. Your employer sends 84, your bank sends 85, and these are usually available by the end of February. Step 3. Choose certified tax software. Wealthsimple Tax, formerly Simple Tax, is completely free for most filers and has a specific Newcomer flow that walks you through partial year filing. Step 4. Enter your exact arrival date, your Canadian income, and any foreign income or assets you need to declare. Step 5. Submit via NETFILE. This sends your return directly to the CRA electronically. Most refunds arrive in 8 business days with direct deposit setup. Step 6. When your notice of assessment arrives, usually within 2 weeks, save it permanently. You will need this document for RRSP contributions, mortgage applications, immigration renewals, and many other future financial decisions. New PRS often leave money on the table because they don't know which deductions apply to them. Moving expenses are fully deductible if you move to Canada to take a job or start a business. That includes flights, shipping your belongings, temporary accommodation, and storage. If you work from home, even partly, a portion of your rent and utilities is deductible. Medical and dental expenses you paid out of pocket can also be claimed once they exceed a threshold. Childcare costs like daycare and after-school programs are deductible up to set limits per child. And if you completed any post-secondary education, tuition credits reduce your tax bill directly. None of these require a tax professional, they are all standard fields inside Wealthsimple Tax. Keep every receipt for at least 6 years, as CRA can audit any return within that window. Let me run through the 5 most common tax mistakes I see new PRS make in year 1. First, not filing because they had little or no income. File anyway, even a zero income return unlocks your benefit payments. Second, forgetting to report foreign income earned after their arrival date. CRA shares data with over 100 countries, this will catch up with you. Third, not filing Form T1135 when they hold foreign assets worth more than $100,000 Canadian. The penalty for missing this is $2,500 per year, minimum. Fourth, waiting until tax season to apply for the GST/HST credit. You can apply the day you land using Form RC-151, don't wait. Fifth, throwing away or losing their notice of assessment after filing. This document is your permanent financial ID in Canada. Store a digital copy somewhere, you will never lose it. Here are the free tools available to every new PR in Canada. Wealthsimple Tax is the most user-friendly free NETFILE certified software available. It guides you through every section including the Newcomer partial year flow. If you prefer in-person help, the Community Volunteer Income Tax Program, known as CVITP, runs free tax clinics at community centers, libraries, and settlement agencies across Canada every filing season. CRA My Account at canada.ca is your central hub for all tax and benefit information. Create it as soon as you have your SIN. Form RC-151 lets you apply for your groceries and essentials benefit credit the moment you arrive, without waiting for tax season. And the official CRA Newcomers Guide at canada.ca/newcomers walks through the entire process in plain language. Use these. They are built for you. Here is what to take away. File your first tax return by April 30th of the year after you arrived, even if you had zero income. Report all world income earned after your arrival date. CRA has information sharing agreements and it will catch up with you. Most new PRS with no prior year income automatically qualify for 100% of available credits. Filing unlocks over $15,000 in combined annual benefits, credits, and RRSP contribution room. Use Wealthsimple Tax for free filing and submit Form RC 151 the day you land to start your GST/HST payments immediately. Your tax return is not a burden. It is a wealth building tool. If this cleared up the confusion around your first Canadian tax return, like the video and subscribe to PR Wealth Lab. Drop a comment. Which province did you land in? And have you filed your first return yet? I respond to every single comment.